Welcome back. Let us now cut across to the Rising Bharat Summit, where Shereen Bhan is in conversation with industry leaders to decode what's driving India's next big growth wave.
Offered an olive branch, so to speak. Japan is already in conversation with the US, or at least that's what the US president seems to suggest at this point in time. We've had a call between Marco Rubio and our own Minister Jaishankar saying that things are on track as far as the India bilateral trade agreement is concerned. The global markets are in a state of panic at this point in time, and we've seen wealth erosion across the US markets, across Asian and European markets, and our own markets as well. So in this very, very volatile mix, how does India position itself? What should our response be? And more importantly, from a domestic point of view, what should we prioritize and focus on? Well, I have three gentlemen who have their ear to the ground and their ear to the clients, who are telling them what is going on at this point in time. Rajiv Memani, let me start by asking you, a Trump era that we live in today, where every tweet changes the way that the markets move, changes the way that policies are being pursued at this point in time. How are you looking at it? When you talk to clients today, when you're talking to your partners sitting in the US and in other parts of the world, what is the view?
Yeah, no, I think very few people really fully are able to grasp the situation now. I think everyone's living on a pretty much day-to-day basis. But if you just step back, I think what's clear to everyone is this position of high fiscal deficit, high trade deficit, high debt, and that debt being owned significantly by the country with which you have the largest trade deficit was not something that was sustainable. And I think President Trump called it out quite aggressively and has been calling it out. In fact, there was an article that was written by Warren Buffett in 2003, which actually captured this very well. So this has been going on for a while, but I think he's the person.
And he's literally the only one who's kept his shirt on, Warren Buffett, while the markets melt.
But no one really called it out the way President Trump has. So one thing is clear, I mean, if you look at all this, that he's very determined that manufacturing has to return to US. So I think if you have to pull out anything, I don't think anything is going to stop him from that. Whether he has to apply pressure on countries, on companies, create the incentive environment for that, I think that's very, very clear. He's also very focused on targeting countries with whom US has a massive trade surplus or trade deficit, and they have a trade surplus. And where he believes that there are issues of the rules are not equitable on both sides. So he's going, as a matter of priority, I think he's going after those countries. So if you peel this further, what this is creating, Shereen, is it's creating a lot of uncertainty.
Yeah.
People are unwilling to take investment calls, unwilling to take business decisions. Supply chains are likely to change in a significant way. So everyone is now, and because of that, if I talk to our clients, especially in the US, they're already calling out that the EPS will not be what they thought it will be, and they're finding it difficult to project forward. CapEx is probably going to be higher. So that's getting reflected in what the stock markets, especially in the US, are showing. So that's one, I would say, that's coming out very clearly. Second is, almost all countries in the world will now look at trying to say, how can I do more? Value chains have to be redefined with countries with whom we have a level of mutual interest.
Right.
It cannot be absolutely one-sided. So the benefit that China got for a period of last 15, 20 years, I think that is difficult to sustain. And I think that means that a lot of supply chains and everything else will be changing. And if you pull this forward and you come back to say what it means for a country like India, and if you add that this uncertainty that AI will create, whether it's in 3 years, 5 years, 10 years from now, when I say uncertainty, much higher productivity, but in terms of jobs, then India has no choice but to look at manufacturing in a very significant way. And if you're looking at manufacturing, if you look at historically countries that have had outlandish growth, sustainably, it's on the basis of exports, whether it's Germany, Korea, China, Japan earlier. That story may not work in that way. So that means your emphasis on domestic value added has to become much, much more stronger. How do you create more domestic value add? How do you build relationships of mutuality where you have mutual interest with those? I think so that you can leverage on the export side of it. And how do you create a business environment which is conducive to all these three things? So whether it's in terms of cost curves, whether it's in terms of ease of doing business, whatever it is. So if you want, I can dive into details of all three.
I'll get you to dive into the details in just a second.
But that's what we are heading from.
That is what we're heading for. But Karan, I want to pick up on a couple of the things that Rajiv has laid on the table to set the context for this conversation. First up, the first order impact of the uncertainty created by the tariffs, this chilling effect that Rajiv spoke of, that investors are going into a state of panic at this point in time, and future investments at this point look uncertain, and so people are going to pause and wait to see how this dust settles. Is that what you're hearing from your clients as well?
I think, Shereen, I agree with Rajiv. There's so much of uncertainty that the clients are all looking at alternative scenarios and what might play out. We'll see multiple, this is a dynamic world, given what you talked about, what the first order reaction is, what different countries are going to respond to, what's going to happen with the macro environment with stagflation, and then the implications on what happens to interest rates, etc. So there's a lot of variables that need to be worked out. So scenarios is the right way to think about. And people will look at...
It's great news for consultants. Isn't that what you do? Paint out scenarios.
And I think there are opportunities here. I wouldn't say this is all a doom and gloom. I think, the opportunity for India, given we're looking at differential tariffs, and if it does play out, and it's great that India has taken Section 4C rather than 4B, and we are negotiating with the US.
Yes.
And if we end up in a good place in those negotiations, this can be a big plus for us. If I also go back to what Prime Minister Modi and Trump talked about, which is the 500 billion export opportunity, I think therein lies potentially a massive opportunity for manufacturing. And Rajiv is exactly right. We need to push up manufacturing to 25% plus because we need that for jobs. And so I think there are sectors where I think India is very strong, very credible. And I think there is a get and a give. The get is in sectors that we're looking for where the US can send us technology. Whether it's defense, whether it's AI, whether you're talking about nuclear energy, I think could be a huge plus for the country. So I think, but having said that, I think there is a few key imperatives we have to make sure we are following through on. The lesson from China, the lesson from Vietnam is we absolutely need to make sure that we have the ease of business and we are attracting more FDI into the country. Our FDI, net FDI is only $10 billion. And we need global champions to come in to help set up that ecosystem. We also need innovation, as Chara talked about in the earlier panel. We need to design in India as we think about Make in India. And it's an absolute must that the private sector must do more on that front. And I think we need global scale to be competitive. We all know about what in China, the big scale companies and the advantage they have. So we have to be hyper competitive. So I think while there may be an opportunity for India here, and I really hope it does work out given how the negotiations will play out, I think there is an imperative for us to, to also take away for the longer term for us to position ourselves appropriately.
Before I get Rahul back into the conversation, let me just get Rajiv and you to comment on what we just heard you say there in terms of the supply chain diversification that is expected. Some of it is already happened post-COVID, but the expectation now, because of the differential that you talked about, Vietnam, China, etc., much higher tariffs in comparison to India. Rajiv, do you believe that that's going to have a beneficial impact on India in the short, near term?
Yeah, I think it should have, but I think it's too early to call out. So if you look at countries that are competing with India, if you look at Mexico, for example, I think the US-Mexico, Canada, the USMCA, has much more favorable clauses than what India has. And I think what President Trump has said is an opening gambit. It's not. This is not a closing. And by the time countries take a defining moment to say they want to change, it takes time. It takes time for companies in India to create capacity. So I would say we are very well positioned because India's ability to negotiate is much greater. If I look at trade deficit of Vietnam, US's trade deficit to Vietnam is $125 billion.
Yeah.
If I look at Mexico, it's $180 billion. If I look at China, it's $320 billion. With India, it's somewhere between 40 to 50 billion.
Yeah.
And there are lots of ways by which India can balance that.
Yeah,
Also,
higher oil imports, LNG imports, defense, all of that. Yeah.
And we have done an analysis to say even if the duty rates were to come down, we can't talk about agriculture here, but in most products, if the duty rates were to come down in India, which is his sort of this, India is the tariff king.
Yes.
It is, I think, and if the markets open up and supply chains get redefined, it'll be a far more beneficial thing for India.
So you're saying industry is okay and on board with a tariff cut, a significant tariff reduction by India?
Most parts of the industry are very open. I won't say all, but I'm saying in aggregation, India will be beneficiary of that. Industry is also wary to say where surplus capacity gets created. India's biggest concern right now is, yes, there's a lot of talk about India-US, but the bigger concern is the surplus capacity this will create in China, Vietnam, and in some sectors in Europe as well. So I think to that extent, people want to watch out for that closely. But I would say broadly, Shereen, most of Indian industry is quite comfortable. And I think if things go as logically one would, and it's very difficult to say this in the current regime, I think India should be a net beneficiary. And companies are quite bullish.
Yeah, and today, this morning, we saw headlines saying that Apple is going to redirect more of its production to India on account of what we're seeing with tariffs on China. Do you believe that that's a one-off? Because we already have the capacity that's been created here, or to Rajiv's point, that people are going to wait to see how this plays out before taking calls on fresh investments and fresh capacity.
Shereen, Apple is already doing, the electronics sector has been a big plus in the way the government has set up the electronics sector in the last few years. I think is a big story around India, so that will continue. Now, Apple is going to wait and watch and figure out, what's the amount of production they'll do in different geographies. But I think it's very smart what the government has done when it has not only has put in the PLIs, and now we're moving towards the latest announcement of going into components, going into more domestic value add, and then even going into design. You've got firms like L&T that are doing semiconductor design in India, and then you've got the fabs, etc., that the Tatas and the Murugappas are setting up. So I think electronics is a very good story in India. But it's still yet to play out to full potential. If you think about electronic value chain in 2030 will be about 6 trillion. It's about 4.3 trillion today. So it's a massive global value chain that we should be thinking of participating. And that's why us getting in front with the right incentives and being competitive with the scale players, you need the scale players like a Tata, the Murugappas to be playing to build that ecosystem in India.
Yeah. Rahul, let me come to you now in terms of the opportunities that you believe present India at this point in time, the sectors that you believe are poised for growth and have a strength and advantage at this stage.
So I think just to build on the previous points, and then I'll come to your point, I think we have to de-average the situation a bit. And if you see from our vantage point, we are the least dependent on US exports, especially as far as goods and merchandise is concerned.
Yeah, 2%.
2%, and it doesn't move the needle for us in terms of our domestic GDP growth and so on. So I think if we negotiate well, as has been said, right, it can open up a large window of opportunity, especially in sectors where the differential tariffs are there and where we have longer term advantage. So if I was there, I would go out and think of it as a positive opportunity creation, where whether it is electronics or it is textile or it is cables and wires, where we see the competing nations have relatively higher tariffs than us. On the other hand, I think we need to be also aware that the whole world trade will get rewritten, and which means that countries which will not provide or supply material to America will supply elsewhere. And for example, China, which has large capacity of many products,
Yeah, rare
they will
minerals
find
and
their
so on
way
and
into
so
the
forth,
country.
yeah.
So we have to be resilient. We have to watch that closely and ensure that our industry is protected against that.
So let me put a challenge your way now. If you had a client who asked you to draw up a scenario for India at this point in time, perhaps the Indian government reached out to BCG and asked you to draw up and do some scenario planning, what would be the 3 or 4 things that you would ask the government to prioritize?
I think it's difficult to pinpoint, but I would say first we have to, in the short term, there will be uncertainty. And there is uncertainty. Whenever uncertainty happens, people freeze decisions. Capital investments will go slow, and therefore in the near term, we will face, and not just we, everyone in the world will face some decision paralysis, some capex slowdown, and therefore it is good to incentivize the economic growth, because our economy is strong and resilient. If you look at our drivers of economy, it's more consumption-led. I think we are talking about manufacturing, but manufacturing has stayed at 15 to 16 to 17% of GDP for decades.
For the last, right? Several decades.
And in contrast, Korea, China is 25, 27%. Yes. If we want to grow from 5-6% to 8-9%, we need manufacturing to pick up. But our base growth comes from consumption. And that is there. Our demographic profile, our rising GDP per capita, spending power, all of that poises to all, whether it is financial services, healthcare, anything that our mass consumes will grow, irrespective of all the macro trends.
You know, and I think